Hello, today we're doing a replay of March 4th, 2025, and we're logging in just 5 minutes before 11 in the morning and looking at our charts and going to analyze them. But first, let's look at the ATM strategy that we want to use for the static account, and that is 20 stop loss, which is $100. We're going to set our stop loss for $100. Our profit target will be $505, but that will be adjustable and within the trade depending on how many reversals we've had, which on the 5-minute chart, we're looking for maybe 3 reversals before we decide that it looks like it's time to close. And then our stop loss strategy is a profit trigger of, when we reach a profit of $100, we're going to move into the trade $10. And that will still leave us a $90 wiggle room from the entry point. So our goal here is to determine from the chart where the best entry point is, that there would likely not be a reversal while we're in our break even. And we want to keep our break even low, but not so low that we would lose money on our on slippage. Okay, so it's going to cover the fee, allow for a $5 slippage, and hopefully everything will be cool. Okay, so that's what our strategy looks like here for the stop strategy, and then what it looks like here for the ATM strategy. Okay, now that that's set up, let's take a look at our chart. So I'm going to go ahead and press play on this, and while we're analyzing the chart, let's assume that we're in real time. Oh, I've got this set for 15 minutes. I'm going to quick get that out of there. Okay, so we've got a reversal here happening. We've already seen it happen up here on the let's move this to a 2-minute chart. We've already seen this happening on our 2-minute chart. And so, but what we're looking for is that this 50 EMA, we're below it. So we want to wait until we're above the 50 EMA. We're going to speed it up just a tad bit. Now, as we've come in, we've got the 15-minute chart is descending sharply red, but it's also trying to come up. But we've already got a crossover here and a crossover here. But just because we have a crossover on our 5-minute chart and our 2-minute chart doesn't mean we want to enter, because we're tapping off of this 50 EMA. And remember, we never want to take trades while we're under the 50 EMA. So we're just going to wait. And also look at this candle. It's spindly, it's wicky. These are wicky, they're skinny. And so we want something that is giving us a little bit more fatness. And so we're going to just wait a little bit. And also, we've just now done our crossover, so we don't want any false positives. Look at this. We've got this candle here. The body of the cloud is just too skinny. So we're going to mark this and see if it stays above it or goes below it. Now, depending on what I show on my chart, you know, the things can get fatter, but we have to be careful after the crossover. So now notice we have the 2-minute has just tapped down to the cloud, but we want to make sure that we have the body of the candle, preferably on the entry. We want to be above the cloud. I mean, above the 50 EMA. So we have here a swing line, a 50 EMA, and we really would like to see a breakout of that swing line and price above the 50 EMA. So let's see, this one fought the 50 EMA and got spindly. But when we see a fat candle coming up there and the body on our candle is getting fat, that's where we would want to try to get in. Okay, this is tapping down to the cloud, which isn't a bad thing because price goes up, price goes down, and that's good when it does that, because that means that we've got a better entry coming up because we can enter closer to the cloud. But we still have to consider that the cloud is not at the 50 EMA. When that cloud reaches the 50 EMA, that's when we're going to start looking for an entry, because that means that the cloud tap is going to be above the 50 EMA. The candle will be above the 50 EMA. We want that cloud to be really close to the 50 EMA. So although this is pretty tempting to get in here because it was above, we want to wait until that next candle is opening above that 50 EMA, not kind of floundering around the 50 EMA and part of the body is there. I mean, basically, if we take a look at this, our price of this is $215 of this candle. So we've only got $100 stop loss. So we don't have wiggle room to be guessing whether this is too early to get in or not. And so because of our $100 stop loss, say we had entered right here. If we go back down, we would have gone back down to 155 and hit our stop loss. So we either have to decide that, hey, we want a bigger stop loss, or we have to make sure that we're following all the rules. The rules being above the 50 EMA, the candle is, the cloud body is close to the 50 EMA. That's kind of what we're looking for. Oh, and let's not forget that we have our equal volume candles on, and we want the candle to be coming up fat. Okay, that probably would have been a good one to get into. Okay, we're above the 50 EMA, and this candle hasn't closed yet, so we don't know if it's going to close above or below it. And so we have to be careful because it could go back down. Okay, it has closed above, so this is a good point for an entry. The previous candle was fat. This one's not as fat, but we're going to go ahead and get in on this. Okay, now we've gone up to our $100, so we pulled our stop loss into BE already. And so now we're just going to do the holding game. Now the rule is we could hold as far as 3 different color changes, but we're going to set our profit target to $500 today because we don't want to risk losing out on anything. We want, our idea is to collect the money while it's on the screen, not to lose it. And so we're just going to be patient, and we're not going to lose money on this trade because we've got in $10. Since we are pulling our stop loss into the trade, you might want to consider just taking a $300 profit, $400, or when you see it go up close to that, grab the profit, because since we're this close to our stop loss here, we just don't like to take any chances. And so we'll see what happens here and see if we can't get a few trades in with this $100 stop loss on RTY. Now this is moving kind of slowly, but I do have it at a 4x speed, so it's moving even more slowly, and that's a good day is when it is moving slowly, because that way we have a chance to think about it and get out early. We also, on slower days, we don't have that fast whipping movement as much. Okay, so we have our TASEE strategy. We've got our trend. Is it above or below the key levels? Now remember, we waited for the cloud and the 50 EMA to be close to each other the cloud is fat and ascending. We've got it already did the crossover here on the 2-minute chart. We've got the entry point was above the 50 EMA, above the cloud, but close to the cloud.
Target filled.
And our stop loss, we set it so that we didn't have more than 3 color changes. So, I mean, this is something we could hold, but because we prefer collecting profits instead of losing profits, well, it does that tap down. We just want to make sure that everything is set for us to just take $500 at a time today. So notice how as soon as we got that profit, it did slam down to red. And so it doesn't hurt if you want to go with a $300 or $400 profit, just to be sure. So this so far seems to be like it's definitely going to hold this crossover on 5-minute, because you don't want to trade on the 2-minute crossovers because you can get some very false positives, and so you have to be careful about that. You want the 5-minute to confirm with it. You want to check that crossover right here, but you also have to be careful of that candle after the 5-minute crossover, because sometimes you got that crossover and then it plummets down and it's saying, nope, I'm not going to do a crossover here. And so you have to be careful of that. And so we're going to go ahead and be looking for entries near here after a tap down. And we just missed that, and the body went up higher here, but we missed it, and we could go ahead and enter, but I don't like the fact that it just went red. And so this is kind of a good time after you get a good trade to go out and take the dog for a walk and just come back in, take a look at the chart. And what we're looking for is a tap down to the cloud, preferably touching the cloud and even going into it a little bit, so that the market can try to do its tricks and stop people out. And then if it continues back up again, that's where we'll take another entry. So be careful of hopping back in when you're off the cloud like this. We've got a whole practically candle body back to that cloud. And let me show you here. So back to this cloud, we're looking at, it's over $100. And so when we're having a stop loss of $100, you're just going to keep losing if you have your price so close to that. So I do recommend a $200 stop loss. We also have to be careful about that. If we have a static account, we just can only lose 3 times at $200. So we want to be careful. We're going to go with the $100 stop loss and see what we can do. So what we want to look for is red coming down, a green cloud going back up to the top of that previous red, and then an entry right on the cloud. That would be ideal, because then the odds of not getting stopped out again. Now, we don't want it to take a long on a red candle. That's just wrong. Over here on our Heikin-Ashi for our 5-minute chart, we've got reds showing in control, so we have to honor that and pay attention to what's happening. We also want to look at what's happening over here on the 2-minute. The cloud is descending, and we don't want a descending cloud. We want the cloud to be ascending. What we're looking for on the 2-minute chart is, let's get another crossover. Let's see if we can get something really close to a crossover or something that is a crossover. So over here, notice that the red came down, but now it's trying to ascend up a little bit here. Now, what we're looking for is we want the candle to break out of this little mini trend line, or to be above this candle body here, to show, hey, I have beaten this downtrend that we've got going on here. We also want our 2-minute to show an ascending cloud. We're still sitting at 4 times the speed. Notice that the candle has peaked above this, but it went right back down and wicked out. So we have to be careful of that. Okay, so now it's above. We're going to go ahead and hit buy and get into this trade. Now notice our candle went up above the body, but it wicked down lower. This one did go up higher. I don't know if 100 is too close. I really don't. Yeah, I don't like that. I think 100 is too close. Okay, we want to hold this again up to our $500, 505. But I am thinking about that $100, and especially not a $75. You're going to be losing $75 all over the place, you know, even with a perfect entry, because you saw how that one was above and then it went back down below again. And that was so close to stopping me out with the $100. If you do a sim, instead of getting in and doing live trades the first week, just do a sim every day for a week. Test your stop loss. Wait for these good entries. Wait for price to be above on longs, above the 50 EMA. Wait for the cloud to be at the 50 EMA. Wait for price to tap back down to the cloud and then come back above this previous candle and be coming off of the cloud. Even at that, I was so close to losing that. Let's check this. I would say it was about $95. If it were $75, that would have been a loss. And so you just have to be really careful about that. We're still sitting at 4 times the speed, so we're going to look for more of that. Remember, we want the cloud to tap down. The red goes into the cloud, and then it comes back out off of the cloud. This kind of thing where it just goes just above the cloud, it's best if it actually taps into the cloud. We also want to be looking for a green candle body to take over the previous candle bodies. Now notice how the 200 EMA is close to our 20 EMA cloud. So that's good because they're close together. It means that the direction hasn't, you know, killed itself off yet. And so we want to consider that. Now, before we take our entry, we want to look at what's happening over here on the 2-minute chart. Okay, so here our green is like right here at our body. That's good, but it hasn't gone up above the body, which is what we're looking for. We're looking for a breakout above this body here. We also want our green 2-minute to be ascending. Right now, this being flat and red top, never neglect your 2-minute chart. It's flat and red top. This is turning flat. It's still a green top though, but we want this body of this cloud to be green, and we want the candle to be coming off the top of the cloud preferably, and of course to be above that previous red candle. We want our price to be above that previous red candle. So notice it's floundering around here at the top of this wick here, and it's floundering on our trend line. So we want to be careful of that. So we've got our red candle coming back down to our cloud here. Okay, notice our 2-minute is showing, well, it was showing an ascending, but right now it's going to be descending again. That's showing a good buy signal. It's the 2-minute crap is going up. I do not like this $100 stop loss at all. One single wrong move and you've just lost it. And so, you know, three trades in a row with a $75 stop loss, you might as well have had your $200 stop loss and been safe. And so I want to give it wiggle room to continue in my favor and not get stopped out. And so we waited for this to be at $100 before we brought that into the trade. And so you could never do this on an NQ chart or probably any other market that is faster than this. Okay, so right now we're showing that price is going to kind of tap this 200 EMA, and that's fine because that's expected that it could go above that 200 EMA, and that's like the 200 EMA breakout. And so we're getting in based on our cloud tap, our candle being above the previous candle here, and entering. So it went down red and back up and turned into a fatter green. And so we're just going to trust our Heikinashis show that the green is in control on both of our 15 and 5 minutes. Our 2-minute cloud is fat and ascending. We've got the 15-minute cloud is fat and ascending, and it did a 15-minute crossover here. And we're well below the swing level up here, so we're pretty safe to keep going. Right now, some people would be taking these trades as a single trade, entering and holding it. But look at how much you lose out on it. You lose out here when it goes down, and then it gets back up, and you can get in again for another entry, as opposed to entering down here and letting it get so close to a loss in your profit target. So you don't want to just keep holding for the 1,000 and so forth. RTY doesn't necessarily see 1,000 that often. You want to, you want to, oh well, we've got our $10 stop loss in there. We're still good. Now, I get squeamish. I freak out on these reversals, but look at that. It's a really wicky body. It didn't come down to it. And a candle tapping back down on a reversal is normal. It goes up, goes down a little, up, down a little, as long as it's still continuing up. And so we look at this trend line here. We're going to draw ourselves a little mini trend line. We're pretty safe as long as everything stays above our trend line, and we want to base it on wicks, not candle bodies. And so you want to draw that right on the wicks, because those are so to the point the majority of the time. Okay, so here our price is going up. We're hoping it'll hit that 505. Ah, crap. Come on, you can do it. Target filled. Good. Okay, so we've got 1,515 for the day, and we're just basically entering on a price above or below the 50 EMA, according to whether you're taking longs or shorts. Price is above the previous red candle that tapped down. I do not advise entering up in the air, or I advise waiting for that color change, tap down, and then entering. And so if we drew our trend line here like this, we want our price to be above there. And so let's look at this. So we've got our prices above here, and notice where we entered right here, it still went down into our trade and squeamed me out. We didn't lose it, so that was good. So what we're looking for is, we do not want flat clouds. We want ascending on longs, descending on shorts. We want it ascending on the 2-minute. We want to have seen a recent cloud crossover or something similar like this. Top was red and descending, and then it went back up. On our 15-minute, we do not want to see a flat cloud at all, because if you see a flat cloud on the 15-minute and prices tapping down to that cloud, you could be going sideways for a long time, and as it goes and bounces up and down. So I do advise changing the stop loss to more than $100, and maybe $150, but because I was almost stopped out twice, at $90. And so $100 is not good. $75 is detrimental. I mean, this is a slow day because I'm on a 4x speed and it's still slow. We're good. We've got some wicks here, so but we're pretty good on the wicks. Over here and over here, not too bad. The cloud is fat and ascending. It's not going sideways. It's a good day. I mean, you'll get totally stopped out at $75. You've got to be aware that's just too close. It doesn't allow you any wiggle room. So I'm going to change this. Okay, so we're going to say save this as 200, 505, BE 110. Save that. Let's just check this out and see what happens. Okay, so I'm going to go ahead and go with this strategy. We want to make sure that we don't get in too close. Okay, so we've got red candle. We want that to tap back down close to the cloud for a good entry. We want our price to be above the previous red candle. And I don't like doing it prior to the candle close because like what you just saw, it went up green and looked to be over the body, but it changed its mind and went back down. So we want that candle that we're looking at to be green. Now notice here on the 15-minute, it's floundering between a red and a green. Okay, we want to see where this candle closes. Okay, that might have been a good entry that we missed, but now we're so far off the cloud. I missed that one. We're going to wait for another red to tap down. Could have got a 200. That's okay. We're wanting to be safe. Okay, now notice the cloud just went up higher, so that's good. We're looking for, and it's red, so now the 15-minute is green, so we're safe to enter on that. But this is a red 2-minute. We got a red 5-minute. We're so far away from our cloud, we want to wait for it to go back down and tap. And this happens all day long. So if you just wait for the red to tap down to the cloud, to go into the cloud body is best. Then the next candle to come up above that cloud, close, and then check out the next candle for your entry. Now you can enter on a candle being above the previous candle, but it's kind of risky in that you don't know where it's going to close. It depends on how risky you want to be and how much stop loss you have. But if you've got a low stop loss, there's really nothing that is going to help you, and 75 is just too low. Okay, so now we came back down to our cloud. It didn't tap into the cloud though yet, but maybe this one will, because notice all of our entries, we had the candle going into the cloud first. Let's see if our first one we did also. Yeah, this one did go into the cloud and then it went sideways a bit and we got our entry. Okay, so this one did go tap down to the cloud. It's not done yet, and our 15-minute is showing a red, and our Heikin-Ash is showing a red, so we don't want to be trading on reds. Now we're also seeing here on our 2-minute, it's red and descending, so we have to be careful about that. Now look, the top of this is turned red, but it's turning green again. We're hoping to see the cloud ascending here, and it's not, so we're going to just hold a bit. Right now, flat means that we're going sideways. Okay, so we've still got the 15 minutes turned green again, but this candle is going up above our price here, but it's not closed yet. And it could be sucked back down into our trend line or back down below that top of that. And so we don't want to trust it just yet for an entry. And plus we're still sitting with kind of a flat Well, it is ascending more. Okay, so this is also ascending here. So we could try to get in on this candle. Okay, it's going back down a little bit. It's turning red. Okay, so it doesn't have the volume that we want, and it did turn red. Look at this. It's not really ascending like we want to see it, so we're not going to enter on this. It's floundering too much between red and green. And so we're going to wait for this one to show more of what we're looking for. Our 2 minutes still showing a skinny flat cloud. And look at the ratio on this: green, green, red, red, green. It's just not going to be safe for our low stop loss that we have here. So we are in a $200 stop loss now, which gives us more wiggle room. And I think we really need that. You know, it could maybe be 150, but I'm just saying, to not get stopped out of our trade, we definitely want an excellent entry. We want and then our price will pull in at the 100. Here's a swing level here, but we're kind of looking for a breakout on that swing level now. So it's been flat, but now it's starting to ascend, but we're worried about tapping this swing level and not being able to do anything about that. But right now we've missed our entry because we want to wait for another red tap down to the cloud. Okay, we're looking for a breakout. And once we see a breakout, we want to be careful at that breakout to see if there's a retest, if it's going to reverse back down to the cloud and then continue on, because that is very common when you have a breakout. So that's what we're looking for now, because we have the swing level. We want our candle to close above the swing level, and then we can enter on that next candle. So that's what we're looking for. Well, if the next candle is the right color and coming off the cloud. Okay, so notice that did not close above the swing level. So we're going to see if this one closes above our swing level. Now notice how it's all up, turned red over here on the 15-minute, red on the 5-minute. Okay, so remember that swing level, that's danger. It's like we're going to hit that and pretend we're going up to fake you out, and then we're going to go back down. Now, we would have lost our stop loss on this if we had entered when it was at this, let's see, that shows about 205, depending on where we entered. So even 200 was pretty close there. Okay, so now we've got our tap down. If it enters our cloud, even better, but we're back down to looking at the 2-minute. The 2-minute is showing a red descending. Always check the 2-minute. Don't neglect the 2-minute. And we want the price to be above this. We want the price to close above this trend line that we've got here. So we're just going to patiently wait at 4 times speed. Now notice from our original entry, which was back here, we've had 1 color change, 2 color change. If we count this, 3, 4 color changes. They're kind of grouped. And so we can do 3 to 4 color changes. We can do 3 to 5 color changes, let's say. And so we can keep getting back into entries after the cloud crossover. After our cloud crossover, we can keep doing entries, maybe 5, 6 color changes at most. But our 200 EMA and our 50 EMA are still pretty close together. So I would say we can go to 1,000 typically on an RTY on that. Okay, so now, oh crap, did I miss my entry? Okay, so we've got red tapping down. It hasn't closed above the swing level, so I didn't miss a good entry because, okay, now that did close above our swing level. So we're looking to enter on that. And okay, so it turned red. I didn't like the color, the candle width. I didn't like it. It was too skinny. So I was reluctant to enter on that. We want it to be, you know, more fat. Okay, there, we're getting better there. That looks like a good one. So we're gonna hold this one, see if we can get our $500. I'm not really happy with where I entered. I was a little late, but the candle had just kind of turned red. Okay, on 2 minute, we're seeing a red. We got it, but our candle did close above the swing level here. And then the next one went tapped back down and then went above and was above the swing level. And like I said, I wish I had been a little bit sooner on this than I was, but I was at 4 times speed and it was moving pretty brisk there. Okay, so RTY has nice slow movements to give you time to think and get in before it's already whipped up beyond where you wanted to enter and then screwed you over. So just be careful of that if you are looking at other markets, because there's so many other markets that'll just whip you out all the time. So, okay, so we're sitting here at the 300 on our 2 minute chart. We're seeing green there. And so we're going to watch this for a color change on this. And as we're trading, we can move the stop up to below the previous candle, because if it goes down below that, you don't want to lose that money. So we're moving it up to 190. Okay, I'm going to move this here to where the candle was before. I don't know that we're going to hit that. Okay, so we didn't quite get our 500 on that. If I had the ideal entry that I was looking for, which was, you know, right about here, well, we still would have been a tad bit short of 500. You know, you don't have to hit 500, but basically that is how you want to move your stop into the trade below the candles as you go to hold on to it. And I haven't been showing you that. If you move your stop loss up as you go before the previous candle, that helps you to not lose out. Now, if I had just let this keep going down, we would have made $10. So you have to be careful of that, especially when you've hit your max color changes from the crossover. So let's count them. We've got our crossover here. It went sideways a while, which is common after a crossover, so be careful. You want to do fat and ascending and above the 50 EMA. Then you enter, you get 1 color change. Enter again, 2 color change. Enter again. I don't know if I really count that. We'll say 3 color change. We could have entered again here. If we had missed this, we could have, this is another good entry here. And that's a good place to move your stop loss if you're in this trade, is move it up here. And I wish I'd shown that as we went along. Oh, that's the 200 EMA. If it looks like it's another good entry, that's where you can move your stop loss. Chances of it not going back down are good, because that's a good entry point. So every good entry point you see while you're in a trade, you could hold during that. Let's take a look at this. Here was my original entry, and I am going to go up to my current, and that is $2,030. Holding that as opposed to $1,695, taking a 500 and getting back in again. So it just depends on how long that you want to sit behind the charts. We started at 11:30 and it is now 2:30, so that's 3 hours. If you want to sit at the charts for 3 hours, you could hold that, but also, you know, do you want to risk losing and having a reversal and not getting anything? We got 1,695 instead of 2,030. That's up to you. You've got your stop loss into your trade. You can wait for another good entry. So we started here and we held it back here, and we say, okay, this would have been another good entry. So we're going to move our stop loss up to this point, which isn't much farther off of our original entry. And then we wait for another reversal and another good entry. Now we're moving our stop loss up to here. And I look at my cursor on the 5-minute chart. And then we say this one goes back down to the cloud, and we get another good entry here. So we move our stop loss up to here. And we could sit there and do this until we hit 2,000 or something. And so then it goes reversal. And do we get another good entry? No, because it's not off the cloud. It's continuing down to the cloud. And now it's going off the cloud. We get another good entry. So we're going to move our stop loss to here. And so then we just let it go up, go back down to the cloud, get another good entry here, move our stop loss to here, and so forth. And then, you know, that's where we got kicked out. So those would be good re-entry points. That's where we're moving our stop loss up to as we go, as we hold. So you have to determine, do you want to keep re-entering or do you want to hold? The pros of re-entering is if you came in later than this candle here, you can identify, hey, there's a good entry here, there's a good entry here, there's a good entry here, and so forth, and keep getting back into the trade. But always count the color changes after the crossover. We've got 1, 2, 3. I don't know to count this. We're going to say 4. This grouping is 4. So, and then it goes back up 5, and then again. So I would say anywhere from 3 to 5, maybe 6 color changes on the 5-minute chart you're good for. And then about that point, it's saying, nope, I'm done. So we're talking about $1,000 distance from the candle top or bottom, depending on which direction we're going, to the yellow 200 is 1,000. Be looking for reversals. So now if we go here, the top of our candle to the yellow is 680. The top of our candle to the yellow is 590. The top of our candle to the yellow is 765. The top of our candle to the yellow is 830. So on RTY, $1,000 can be the sweet spot, but again, that depends on the day of the week and whether we're getting a nice market of ascending cloud. Anyway, that's something to look for. I